Welcome to the Growth Cap podcast, where we chat with CEOs, investors, and other key industry leaders to uncover insights and strategies for accelerating growth and succeeding in business. I'm your host, RJ Lumba, managing partner of Growth Cap. In this episode, we chat with Ramzi Ramsey of Softbank Vision Fund, the iconic $100 billion venture capital fund. The fund is not only impressive because of its size, but also because of the enduring vision and ambition of its founder, Masayoshi Son, and his team. Ramzi focuses primarily on direct private company investments in the enterprise software space. We cover quite a bit of ground in this conversation, from the genesis of Softbank to the founding of the Vision Fund, and to how Ramzi and his colleagues quickly have significant impact on the companies they invest in. Ramzi graduated from Carnegie Mellon University and earned his MBA from Harvard Business School. We hope you enjoyed the show. Ramzi, a pleasure to chat with you. Really appreciate you taking the time to speak with us. And for those in our audience who might not be very familiar with Softbank Vision Fund, can you tell us a little bit about the firm as well as your current role with them?
Of course, happy to, and thanks for having me today. First, maybe before I explain the Vision Fund, I think it's important to digress for a second and just explain the parent company a little bit more and kind of why a fund of this size was created. So Softbank was started about 40 years ago as a computer parts and software store, really. That's where the name Softbank actually originates from. The organization moved into kind of trade journals and magazines before becoming kind of the holdco structure that you see today. So the company since probably the 90s has been investing in a bunch of JVs around the world. So Yahoo Japan, Ziff Davis, Alibaba, all happened in the 90s. Alibaba is probably the most famous one, which was an investment that went from roughly $20-30 million to over $60 billion in market cap today. So a pretty nice gain on that one. So the Vision Fund was actually started by Masa in his belief that AI will drive the next wave of technological kind of evolution. Much like the internet drove that wave in the late 90s and early 2000s. So the Vision Fund was created to kind of really accelerate that process of companies adopting AI and kind of new technologies. We just as an organization, to help folks understand, cover 5 sectors in the U.S. Each one has a sector lead, including consumer, fintech, transport logistics, frontier tech, and I represent the enterprise software group. Along with a couple other colleagues, I help lead our focus on enterprise software, which really means kind of all B2B application and infrastructure software.
Got it. That's helpful. And maybe what we'll do is we'll talk a little bit about you and your background, and then we'll come back to Softbank Vision Fund. So you've got a great kind of career track record in finance and in more particular investing, principal investing. Maybe you could share with us a little bit about your background and then your specifically what you're focused on currently.
Totally. So I spent a little over the last decade at 2 funds primarily, TCV, Technology Crossover Ventures, and TA Associates. I am who I am today because of the training and time I spent, at those 2 funds. Some of the smartest people in the industry really kind of taught me what I know today in software and consumer internet, and I still actually collaborate with them quite a bunch. So when the Softbank opportunity came up, there were a couple things specifically that excited me by it. First, as I mentioned earlier, there are 5 really sector area focuses in the U.S. Software, our focus on software is essentially the last of those 5 groups to get stood up. So there was a real kind of entrepreneurial ability to stand up a group with some other colleagues and build a team around it. And so that in and of itself, with the brand of Softbank behind you, is a pretty exciting opportunity. But more importantly, I don't think a lot of people appreciate how much Softbank offers to portfolio companies and kind of how active of an investor we are today. Maybe just a couple points to hit on that. Specifically for software, Japan is the second largest IT spend market in the world. Much of that is enterprise or software spend. And funny enough, it is also one of the hardest markets in the world to crack without a local partner. And so we actually have a JV team and a playbook to help companies access the Japanese markets in situations that it makes sense for them. I think that's kind of point number one. The second one is we actually have a quite sizable operating partner team where every investment we make gets a dedicated operating partner who essentially helps serve as a go-to-market engine within our portfolio. There's something pretty special about Softbank and the way the portfolio companies all work together. Perhaps you could say it's Japanese kind of cultural in the way the portfolio companies work together. But one of the best examples, just to put some numbers to it, one of my first investments when I joined the Vision Fund is a company called Automation Anywhere, which provides robotic process automation solutions, RPA solutions, to a bunch of different industries. I think a lot of people actually underestimate the size of the portfolio, and they just think it's the Vision Fund companies. But you have to remember what I mentioned earlier is Softbank Parent Co. actually is a pretty active investor in a number of different businesses globally as well. And so there's a similar partnership JV team that kind of helps our businesses access the Latin American market. Some of our portfolio companies also help with Southeast Asia. So to kind of bump it up a level, I think what's been super exciting for me personally to join is the ability to start the team. I've got a lot of resources at Softbank that can really help companies that we invest in. And we have that mind share with the best companies in the world. And it's really on us to find them and help them become even bigger and greater over time.
And a lot of folks in our audience are either limited partners or family offices, large family offices that invest in the private equity asset class. And to them, typically analyzing various general partners in the market, it's sometimes difficult to discern who is actually, providing operational expertise. And you mentioned, one of the advantages of a company partnering with Softbank is the force and speed with which you can act. And you alluded to this in kind of your prior commentary, but could you maybe expand on that a little bit?
Yeah, of course. And I think, as for the LP listeners, I think, look, we're in a very exciting but also, unprecedented time. We've been in almost a decade-long bull market. Tech has been performing extremely well in the public markets, and knock on wood, nobody's got a crystal ball to look forward, but it seems like that trend is continuing and accelerating going forward. So and a lot of the funds I've worked with in the past, and now at Softbank, it's been a very active management experience, if that makes sense. So that, in the event that something happens to the markets, our belief is that those who provide real value will be the ones that will still be able to deploy capital, given the track record of helping companies. We did, with your specific question on kind of force and speed with which we act, all kidding aside, we did just invest almost $100 billion in almost 3 years. So no one can criticize us for moving slowly. But that being said, when we find a company we like, we're incredibly incentivized to move, as quickly as we can. Sometimes our diligence, it's a little different, right? It sometimes is a little longer than other firms because when we do see that operational benefit, like where we can plug a company into our network. Generally, I'd at least love the time to really explore that out because it really helps the company and it helps ourselves understand, is there real synergy where, is 1 + 1 going to be more than 2, essentially is what I'm saying. And so, there may be some situations where, a company is raising money and they'd like an answer in 3-4 days. And sometimes we can kind of act that quickly, but, the situations we're really trying to solve for are, what are the real relationships that, although we've got, a lot of capital, what can we do beyond just the capital that we're providing to certain companies? So it's a pretty robust investment diligence kind of valuation process. The fun quirk is every company actually does meet Masa, and 90% of the time it's in Tokyo, and it's an opportunity to learn from our leader, who's invested in hundreds, if not thousands, of companies over his career. Essentially a self-made successful businessman. So, folks actually, I actually thought that would maybe be would slow our diligence process down when we, would have to ask a CEO, hey, would you like to go to Japan or do a video conference? And actually 9 times out of 10, folks are excited to hop on a plane and go to Japan, and we build a day around it where they meet other successful JVs and portfolio companies and stuff like that. So it's a fun experience.
Yeah, he's an iconic figure, and frequently in the media these days. It's interesting. He has a quote on the website about a founder's ambition, how that determines the ultimate success of the company. I'm paraphrasing a little bit, but
Yeah.
it would be great to hear any insight you have on how his vision and just, the way he thinks about the world really helps drive Softbank and the funds.
Yeah, it's and I think that actually it's a great comment. I mean, I think it really relates to when companies go and meet him. We've certainly briefed him on diligence, ahead of time, but he's really trying to assess the quality of the man or woman that's there, and kind of what's in the gut. Are they there to build a great business, or are they there to build an okay business? And I think that's really what he's trying to figure out.
Which areas of enterprise software are you most excited about?
Yeah, there are a couple. Probably 2 or 3 areas. I think one, in a very broad sense, there's this tremendous force, moving all data and processing to the cloud, and there have been some tremendous businesses kind of built on that very simple transition, but there's a whole environment both on the infrastructure side and on the application and toolkit side that is being created out of thin air, that is following that one simple tailwind, the movement kind of from on-prem to the cloud. So that's something we obviously spend a lot of time thinking about. I think the second is the theme of automation. And again, very simple in its concept, but as you think of automation for the knowledge worker, and how do you increase productivity given the increased compute power that companies now have, the increased tech flexibility that they have. RPA was just one piece of that, which is obviously a tremendous category, growing at unprecedented rates. But there's a lot of other themes within automation that we're spending time in. And then obviously the theme of artificial intelligence, and I don't mean to say that in the cheesy way, because I think there's I can't count how many companies are .ai and expect an extra zero in valuation because of that. But we do a lot of work around who are the real AI companies out there, who is which of them are real businesses, and as opposed to consultancies or service operations, and we spend a lot of time thinking about that as well. So those are just a couple areas where we're spending some time in.
When we think about the size of the Vision Fund as well as the second one on its way, and then tying that to the way Masa looks at companies, is there a certain size threshold that an entrepreneur must be able to meet with his or her vision in order to be a good fit for Vision Fund?
I think the one consistent theme has got to be TAM, or total addressable market, for the company. And TAM's always a tricky thing, right? There's future TAM, kind of what is the possibility in the size of an industry, and then there's current TAM, current spend, bottoms up, that you add up. When we made the RPA investment, the current TAM for RPA was actually not that big, right? There were a couple companies that were generating revenue very quickly, but the idea was that this would be a over $10 billion industry going forward in the longer run. And so that's an example of an investment in an industry that has a massive TAM that we think will happen in the future. Others, are existing large markets. But I think, so when you think of all of our transportation bets, transport's a massive current spend category, and we're just trying to reallocate spend from legacy products to, newer tech products. But I think that is the underlying theme of what we're looking for. There's so for example, for my specific category for software, there's a lot of wonderful vertical application software companies. Perhaps it's a niche market, and would make a great company to run, is a great company standalone, and would make a great investment opportunity. That's probably less for us, candidly speaking. There are also great, LBO plays or levered buyout plays, or even levered investment plays. We're not really trying to make money off the financial engineering. We're really trying to make it off the growth of the business. And so that's kind of how I would say TAM is the one consistent theme, across the portfolio. Perhaps, one other sub-theme is we do really, for most of our investments, we do like to see that there's some way we can provide some alpha, generate some alpha, or provide some synergy to the business, right? Can we take them to the Middle East? Can we take them to Japan? Can we take them to Latin America? Can we sell the product in our portfolio? Can multiple companies, work together? I think the best example actually of this is in transport, where we've got a mapping investment in Mapbox. We've got an autonomous vehicles investment in GM Cruise, and then obviously through parts of Uber. We have a ride-hailing investment in Didi and Uber and others. We have parking investment in Park Jockey. We have vehicle, used car sales in Auto1 and Fit. So, it's a pretty extensive investment throughout the stack, and it provides at least some synergy for some of those companies working together.
As we kind of draw the conversation to a close, maybe what we could chat about last is, what's next for Softbank Vision Fund? Obviously, there's the, second large fund that you have underway, but broadly speaking, where do you think the organization is headed? I guess we could answer that either, the parent co or the funds. Is there kind of a sort of a long-term plan and big vision for where this is headed?
I think it's, to be honest, I think it's, continue doing what we're doing. We've done a lot in fintech. There's probably more to do. We've done a lot in real estate. There's probably more to do. We haven't done much in agriculture. There's a lot of other areas that the fund can penetrate from a new perspective. But from, is there, a significant change in strategy or anything like that? I think we're going to be focused on the same, essentially the same things we've been doing so far, and we're super excited about that.
Excellent. Well, Ramzi, really appreciate you taking the time. I know our audience will find this very insightful. Thank you.
Absolutely. Thank you so much for your time.